All right, folks. February the 14th, Friday. Welcome to the show, YouTube, Patreon. Happy Valentine's Day. Let's begin right here, folks. The moment you can hear me fine, you can see the picture fine. I'm looking at Apple, the 3 minutes chart. Just give me a little bit of feedback in the comment section. I'll begin right away. Thank you so much. And again, a reminder, please post your comments and questions anywhere you'd like on Patreon or on Discord. I'll catch them all. Let's begin here right away, folks. We have the dynamic that we usually watch, which is Apple and NVIDIA, because the rest of the market is not doing that good. It's kind of flattish. Some sectors, like in the asset management, are up. Goldman Sachs, Morgan Stanley, that kind of thing. But rest of the market is kind of flattish, so we're dependent now on Apple and NVIDIA and how we see their options trading for this day. So Apple, we'll look at the options in a minute here for the SPY and Apple, but Apple right now is still strong. I'm not seeing any sign here. But look at the hourly chart. It is overbought, so there is a possibility that we can head down, but I think that unless we see buying of the 240s today, 240 puts that is, it'll be really hard to push it down. And the other thing is, if you have Apple weak, but NVIDIA strong, then that's going to keep the indices still afloat. You need to see both of them going down. And we're noticing this tick-by-tick stuff. So you see here, NVIDIA been rallying, let's say, 709 all the way to 733. And then you see here Apple coming back down. NVIDIA flips to red, and you see it's substituted by Apple going higher. If you see this kind of dynamic, then it's going to be really hard to push the indices down. But once both of them begin to trade down, you see the indices responding properly. So I think that's going to depend on the VIX, that both of them sell together. Otherwise, if the VIX is low, then one will go up, the other one will go down, or both will go up. And it's going to be really hard for the SPY to pull back. So we'll keep an eye on the VIX. Is the VIX a little too oversold at this point? It's kind of in the shorter term charts, like the 5 minutes, for example. It might try to make it all the way to this range right here, to 520-ish. If it does, you'll see a bit of a pullback. But again, all in all, in the daily chart, you need to see something significant here as to suggest a failure of breaking out. Otherwise, closing in or around anything here, even if we get a red candle, it still has the confirmation that we broke above this sloping line. And now you have, if you look at the vortex here, it was kind of a battle, but right now the vortex is showing that it was resolved in favor of the bullish momentum. So unless we see damage today, significant damage, it's going to be hard to make a judgment to say that, okay, we're going to reverse. But keep in mind the discussion from last night that we have seasonality. So I think that the trade that I gave you yesterday for the SPY is the best approach. NVIDIA again weak, Apple a little strong, but look at the other guys. Microsoft remains on the weaker side. You got to remember the trade that I suggested, which is the 410-400. I mean, that's still on the table here. And the reason is you see Microsoft is failing to stay above 408.66, which was support here and again here, then resistance closed above. If it can't make it above 408.66, then you need to seek support, and it's going to be, my 2 cents would be at 400. That's going to be the round number. So Microsoft remains strong, Microsoft remains weak, while Apple and NVIDIA are the strong. Amazon may be joining the week a little bit today. You see, I gave you the morning brief. If we take the 50 out today, then why not? Let's do a trade on it. Because retail sales was not that good, and in Amazon, the results were also concerning. So you might see a retracement all the way back. Let's see where the 100 is going to get us. 100 is a little too far. So we'll stick to 218.73. And again, the trade that I will probably, most likely I would do before the end of the day is Amazon. I'm going to go and check another week here. So let's do the 225. And I'm going to be selling the 215, which is close to the number that I got, which is 218. And this is going to be a proper trade here. 240 to make 750 with a 33 chance of profit. You can bump it another week, get a little bit of time for the trade to work out. But the reason why we're picking 225 is if we by today we have 2 weeks, and this is why we have to be really close to the money. But if you want to go to the 21st, for example, then you can afford to do 220, 210, and then you have a similar chance of profits, but now you have a longer time horizon, although you're going to need a bigger break-even number. So think about these two trades. For the 21st, it's 220, 210. If you want to do a shorter expiration date, let's do the 225, 215 for the 28. Again, similar chance of profit. So that's probably going to be the trade for Amazon. Let's see the intraday here, how it's trading. It's not doing pretty good. Retail sales was not good, and I think that's the weak link here. Google remains on the weaker side, so I think if it continues to trade like this, then sooner than later it's going to be at the gap, closing this gap altogether. So you have the dynamic of Microsoft, Google, Amazon. Those are weaker. You have the dynamic of then Apple, NVIDIA staying strong. What about Meta? Meta's still strong. We're not seeing any sign here, even though the options are really cheap with an overbought chart like this. But you know what's going on in the market right now, folks? There's no sellers showing up. I mean, you see how the volume for the puts is so dry, and sellers just not incentivized to even hedge or do anything. So you see the VIX kind of suppressed. Is it wrongful? Is it? Yeah, I think so, with all of the threats that we got. But even the Meta, you see the volume here, barely any selling. Folks are not selling unless there's a catalyst. There's a reason to sell. I would look at Meta right here. And the problem here is it's really hard to speculate, though, because it could be sort of a rising wedge, and it breaks down. And given how cheap the options, relatively speaking, for Meta, it could be a juicy trade here if you nail the timing correctly. That's the key word. Nail the timing, and it's kind of hard. So I'd love to see sort of a sign like a bearish engulfing candle today. That will give me more comfort to take the shot. So I'm eyeing it. I'm keeping it in mind, but for now it remains strong. So we'll leave it alone. Concentrate more on Amazon trade instead of Meta. But that's the big caps for you. Anything else that we can look at here? The gambling stuff, as the title of the video suggests. I mean, DraftKings did pretty good. The earnings came out. The Super Bowl gambling was really favorable to the bookies. So you see DraftKings, MGM continues to move up, although MGM I think is a little too excessive here outside of the bands, so it's going to stall a little bit and allow the upper bands to expand. But you probably have an opportunity in the other guys that we talked about yesterday. So Wynn did pretty good, moving higher, and I think that we'll see if we look at the weekly chart. You'll see Wynn Resorts clean this up here. Probably, I mean, this is sort of a gigantic falling wedge here, folks. If you look at this from the perspective of falling wedge, if we break on the weekly, I mean, I think we're at least going to stop here at the top of this candle. So 100 becomes in play again for Wynn. So think about maybe an entry for Wynn. Las Vegas Sands could be too. It's a little bit lagging, so it could be a catch up. And then you have MLCO, which is cheaper than the rest. So all of these plays are still valid. And of course, looking at BABA, still hot today, but is it the candle that we need for a pullback? I think so. I think it might be the candle that stops it right here. I don't know if it's going to go negative, though. So the question becomes, when do we add Baidu? Because it's at the upper Bollinger Bands. If BABA pulls back, then Baidu is going to pull back, even though we have a lot of good news for Baidu. I'm going to hold my horses here, hope for that pullback to happen. And, I mean, before this report, maybe I'll add some call exposure. If the name pops, then exercise it on the stock that way. So I think we can be a little bit more patient. If you didn't enter the Chinese names, I think you could get a chance in entering because it's kind of unsustainable here. And we'll look at the options market. You'll see that the IV rank is probably at 90 right now in Alibaba. So I think it stops today, begins to head down, and gives you the opportunity to enter at some point when we pull back. Some of the movers today, let's check out here. Airbnb earnings, even though all of the indicators were negative, but it is what it is. The market shows something. You see Wynn, that's moving pretty good. We talked about the casinos. HIMS, no stop in sight here, continues to blast higher. GameStop, which I thought on Discord, that if we see this retail participation in the market, It's just a matter of time before we see them jumping into GameStop again. And you see it, they're going to do cryptos. Okay, got it. But you see the momentum turning positive here. So could be more where that came from for GameStop. The lithium plays looking pretty good here for QuantumScape. Revvion added yesterday. We'll probably add a little more later on after this report. Micron, somebody asked about it yesterday, and it still remains a hot name. RKK, with the yields going down, we got no trade anymore. That's invalid. In the IWM, the same thing, by the way. NEO, keep an eye on this guy here. NEO, I think it's going to be the next one to pop, because if you look at the weekly chart, we're just waiting and waiting and waiting, and I think we'll see a huge pop coming in NEO. But besides that, let's look here at the daily chart. We talked about a lot of these names. So the asset management like Goldman Sachs of the world are doing pretty good. Energy, if we look at energy commodities today, they're doing pretty good. RBOB. So Valero is holding here. For those of you who bought Valero or have any exposure, even Phillips is okay if you'd like, because Phillips is where the professionals are buying. Maybe you'd like Phillips a bit more, and you'll do something such as an ABC breakout here. Let's see the dividend. Dividend is about 3.66. That's pretty good, actually. Then we look at VLO, 345, so it is similar. But right now, the RBOB is moving higher, so we see 50s being defended. That's great news for Valero. And then we look at the weekly chart, still keeping the inverse on his shoulder with positive momentum. So I think this is a position that maybe I'll be adding to it before the end of the day. Let's see, what else do we have here? Lithium plays with the dollar going down. But again, can we guarantee that the dollar is going to continue to go down? This guy is really sensitive to the dollar. Yields is going down. That's going to serve Lennar okay. But again, the home builders, I say avoid, stick to the staples or utilities or real estate in playing the yield game. FedEx, we talked about this in the morning brief. So if it closes like this, we can't enter. But if we begin to trend negative and kind of it appears to be a failure at the gap, then I'm probably going to enter a trade that could be the 260, 250 put spread. We'll go to Marsh for that one. But let's just see how it trades here in the next few minutes. Let's check on some of the charts that I talked about in the morning brief. So McCormick. This is promising because it pays dividend and it's part of the defensives. You see the pattern here of lower highs, lower lows. Is it forming a higher low and it's ready to go higher? That's the idea here. And I think maybe. So we'll think about it. If it trades pretty good today, we'll add it to the portfolio, at least a portion, and then see what happens in the next few weeks and add more. Okay, let's do here the losers. Losers of the day, Dennis. Continues to be a disaster, but here we go. GoDaddy finally breaking down, but not enough. Look at the weekly chart, not enough. It's probably just going to retouch this trend line right here and then find some support. Coinbase, disappointing a little bit, even though Robinhood came out hot. I think maybe they priced it in. I don't think, it had really pretty good reports. So baffling response here for Coinbase. AMAD, this is a position that I'm probably going to exit today. I had some put options before the earnings, probably going to exercise them and get the hell out. It's not the worst report, but it doesn't give you solid evidence that demand is heating up for chip equipment, which, by the way, should be negative for NVIDIA, but right now NVIDIA is an options kind of play. Palo Alto heading down, Intel pulling back a little bit, but again, as we said in yesterday's video, pullbacks in Intel will probably be an opportunity to buy because the name is going to still be squeezed. KTOS, this is a name that in defense, even though it has a report coming out right here, but I did buy the 30 puts. That way, if it goes down, I'm going to sell it from a portfolio at 30 and exit the position. I mean, if you remember, we bought it right around there. So we're still going to make over about 100% worth of gains in it. But with the talk about having the budget of defense, you'll see defense not reacting pretty good today. Although I want to see how this earnings report looked like before I decide to sell it. PG, I'm not sure why we're down today. It's supposed to to be holding pretty good. I haven't seen any in the news. I mean, here they downgraded the price from 185 to 180, but I'm not seeing that is the reason. So something is going on here. Snowflake pulling back a little bit here, but it's still in the heels of big gains to come. We've seen Palo Alto down, so that's impacting cybersecurity a little negatively today. We talked about the defense contractors, GDX. So gold, let's look at gold really quickly here. Even though the dollar is down, but you see gold hitting down. And I think, like I said, you probably want to be in the other metals right now, allow gold to cool off a little bit, then it'll be an opportunity to buy. So if we look at the SLV, it's popping higher, so SLV is kind of outperforming GLD today. If we look at copper, down, even though the dollar is higher, so copper is just pulling back a little bit. Palladium holding a little better. So the laggards are kind of holding a little better from the dollar sensitive side. I mean, you see wheat here doing pretty good, up about 3.5. So anyhow, this is a little bit of an idea of the movers and what's going on right now in the market, but we'll keep it at Apple because these are the important names. Apple getting a little softer, but NVIDIA is still hot, so kind of hard to knock down the SPY. Looking at the walls really quickly here before we segue. When we look at calls, I mean, you see the volume showing up big here in the calls again, right? They're buying hundreds of thousands of contracts. There is a little bit on the 610 on the put side, but again, overwhelmingly, the volume is supportive of the calls more than the puts. The change in OI pretty much equal. We're not seeing disparity in the demand for either. The market maker, of course, would love to knock some of these open interest calls out of the money, maybe all the way to 6 or 7 if they can. But the problem here is you see big numbers also in the puts, so you probably don't want to run into these numbers. So here in a session like this, when you have high open interest in both and high OI change in both, it comes down to the volume. So the market maker is going to follow who has the bigger volume. If the calls continue to lead the volume, they're going to have to go with the calls. If the puts begin to increase the volumes at 609, 610, then the market maker is going to flip it. So that's the dynamic for today's session, folks. Let's see what you guys got. John, Stone, Mike, Stefan, Michael, John, N. Everybody, welcome to the show. Mehmet. Hey, Mav, gold going down with the dollar? Yes. Yes, because dollar is going, we've seen that before. I mean, gold been rallying higher with the dollar for a while, and that tells you that gold been pretty much held as a defensive play. Along with the dollar, perhaps. Now that the dollar is breaking down, you see a little bit of demand coming out of gold. At some point, of course, gold is going to be a buy if the dollar continues to go down. Well, the dip should be bought in gold, no brainer. But right now, because we have sort of a move in the market from risk off to risk on, now that if you look at the chart of the SPY, for example, you look at the daily chart, folks are saying, okay, the tariff is out of the way. At least the reciprocal ones, out of the way, and we didn't care. Inflation came out hot, we didn't care. And we're now above the pattern. We have a bullish breakout, so do we really need risk off at this point? Let's go with risk on. That's why they're dumping gold. They could be proven wrong at the end of the day, but right now this is the assumption, and this is why we see gold heading down along with the dollar. Jeffrey, I got a question for you. I asked you before if it would be able to come live at 6:30. You said you're busy trading in the morning. Couldn't you come on while you're trading and just talk about what you're trading and while you're doing your trades? You don't have to answer questions, but at least people can listen to what you're buying and selling. That could be. But again, I mean, when I'm trading, you really don't want to mess with me because I have my own issues when I'm trading too. Sometimes it gets stressful, sometimes so it's kind of hard to do that. And you don't want to really do mistakes in the morning, 6:30, 7:30, because the first hour you see sort of algorithmic reactions, you see overnight reactions. So sometimes you see volatility in the morning. And the pitfall for many traders is they enter trades right off the gate when the volatility is high, and they think that the tape is going to go up or down for a certain reason. And they get stuck in a trade, and you realize that you overpaid for it, and now the tape is getting boring and doing nothing, it's just stalling and going against your way. So Usually, the first hour is trappy. In certain circumstances and certain trading sessions, it's really juicy to close trades, to open trades really quickly. But for the most part, I think that's the pitfall for most traders, is trying to get into the first hour of the day. The best time of the day to open the trades, if you want to open at a cheaper price, is right around the halftime, 9:30 Pacific time. That's when we see options premiums are the cheapest, and you can enter positions at that point. Stefan, I felt the bags on the VIX this morning when it was around 1492. This double bottom before the weekend and February seasonality, and this sudden pump has me very busy or very uneasy about markets. Something just doesn't add up about it, right? Something doesn't add up because we're just pumping Apple here. I mean, for just speculative, I mean, I understand why, but still, we've added here perhaps a value of about $200 billion based on speculation and of the China story. And my 2 cents, they can do the AI in China, it wouldn't change anything because the Chinese phones already have better AI right now. It might force an upgrade cycle, and that's what the market is betting on. But then you have NVIDIA, and NVIDIA is just on a bet that all the big caps are spending. So we're moving based on 2 names right now in the market, and I'm just not sure if that's sustainable. If the seasonality begins to kick in, we see folks booking profits from these 2 trades, Apple and NVIDIA. It'll be hard for the SPY to continue to hold. Now, as far as the VIX, you have quite a bit of support here. But I would say if we trade below, if you look at the wick here, 1479, let's call it 1480, and the lows here at the 14. So I would say 14 and a half. If we take that, you probably want to exit because you're going to revisit the lows in the VIX. I'm with you that the seasonality could be a reason to buy the VIX, but just keep in mind 14 and a half. If we continue to slide down to 14 and a half, then I'll probably exit and then re-enter at more clarity. Even though I'm looking at the VIX right now, the hourly chart, not oversold yet. I mean, we've seen every time it gets oversold to these levels right here, you see a bit of a rebound. Of course, the hourly is not enough for the VIX, so I like to use the 2 hours. We're not oversold enough for the VIX to pop here. Maybe it has a little more, so long as it doesn't take 14 and a half. I'm with you. Dr. Mark Flies. GME and AMC are heating up like the last pump. A lot of open interest for Marsh calls, which includes me. A lot of opportunity. We just loaded the AUD USD longs. So, okay, I'm with you. I think that GME, we talked about that in Discord, that we might see more demand coming in, that the retail traders are joining the market again. At some point, they're going to get bored with the Tesla and the Palantir. Those are going to be really expensive to play. And some folks love, they're not going to do options. They like to do shares, and they see the market is hot, and they want to participate. So I think that's going to increase the demand for GameStop. So maybe you'll speculate in some lottos today, betting that we see a move higher. Sure, I'm with you. AMC, I don't know about that. It died a long time ago, and it doesn't have the same catalyst in the fan base, the active fan base as we see in GameStop. So if you're going to pick any of these 2, I'll go with GameStop. Now, as far as the Australian dollar, AUD, if you went long today, are you justified? Yes, I think so. We talked about this before, right? The Australian dollar is a buy. And US dollar continues to go down. We'll see the Aussie heading higher. So I'm with you with this trade. Pretty good. Keep it. You have to identify support in the dollar, and I think we're not going to find support now that we cracked below the 50. We have to go to the 100 moving average. So another drop here that could take us to this support zone, and then it might head down further. It might go down here to 103-ish, 104. So stay along the Australian dollar for now, but understand that it is a rent. It's not a buy for a longer term horizon because the dollar is going to make a comeback again. Let's look at the VIX here. 3 minutes. little bit of a pop. Not enough, though. You got to see these two guys going down. $3 trillion companies. Imagine that. Jeffrey, are you still holding your SPY puts, or do you sell out of them? We closing all of these SPY puts from last Friday. And what I opened yesterday, will continue to open today, is the trade that I gave you in the video, which is one call spread on the upside for the 620 calendar calls, and then one put debit spread for the 28, which is it costs the same thing as the calendar calls, but it gives you an opportunity that if you look at the SPY here, if we're indeed going to close above and we have plenty of room on the hour side to go higher, suppose the market wants to heat up and head higher, then I think the 620 calendar calls will serve you pretty good because it's about the 2% mark. You can close the leg that you're going to sell, and the calendar calls will probably expire worthless next week. And then you can play the 620. And then at the same time, you have the 600 puts. We did the 590, 600, 590 puts for the expiration date of the 28. And the key here, of course, by today's session, if we're closing above, if we don't see any movement to the downside, no increase in volatility, then you keep one leg of that trade and close the other. Now, some folks would say, but what about the seasonality? What if we open Monday gapping down and all of this turns around? Then you can keep the trade all the way till Monday, but you got to make a decision Friday or Monday max in keeping one leg of the trade. Because if you keep both of them and one of them works out, it has to work out in paying you more than 100% to make up for the cost of the other trade. So it's sort of a strangle trade. Some folks know what I'm talking about here, doing strangles, but it's strangle via spreads, which requires you that you're going to close one of those legs, either the calls or the puts, depending on the movement that we see here in the tape. Because, and again, the other SPY puts, let's say the 600 or 590, or want to go below that, 590, 585, now it's way too far. It becomes pretty much really hard, impossible to get to those numbers. Unless we see a big flush down today and we take 603, then they get back in play. Okay, you took the Meta 14th, 700, 680 put bear spread. Maybe a little early, but again, you never know. You never know if it's going to work out or not. I would say, for me, if I'm trading right now, I'd avoid Meta. I want to see a little bit of a crack below this rising wedge that we see. And I would concentrate more on the put side of Microsoft, Amazon, and Google, if you'd like. Because those are the weak. Meta might be a little challenging, so keep it. I'm not against it. Keep it. But if, let's say, Monday it's not working out, you're beginning to see decay, Meta's still going higher, then I would say exit. Wait for the candlesticks to give us a confirmation that it is reversing, and then re-enter. And you can rotate the play to another ticker that is playing out. Okay, let's do here BABA. The IV is 100%. What is your expectations in the pullback target? I agree. I mean, you're seeing today that we're pulling back, and this is probably a topping candle. I think we're probably going to close the gap here. That's guaranteed. And then we might find some support in and around this zone right here, because this was resistance. You see the wicks. So that's 110, the high 110, 111, 110 will be a point where if we find support at that point, I think we pull back. Or we find support at that point, it begins to rebound higher. That's the point we want to buy Alibaba at that point. If you want to short it for a trade, I would say go with the 120, 110, because that's going to be the most realistic trade for a pullback. The demand is still hot, and they can pick it up at any pullback here. But I think that 120, 110 is a proper pullback trade. Make profits from it. The name pulls back. Think about switching to the calls after that. Mav, I got the XLY, the puts for the 21st, that's next week, already in the money. Should I close and take the profits to avoid the long weekend or roll to the 28th? Okay, so let's look at the XLY, and you have, I don't have the strikes though. So if I look at the XLY, you probably got it maybe right around here. So you're still in the money. You made quite a bit of profit here. It could roll over. Look, it could roll over from a topping head and shoulder perspective, but this is sort of a Tesla dependent. So when Tesla got hit, we've seen this guy got hit. And Amazon also has a weight in this ETF. The momentum is negative, but I would say right now, since you're in the money and you made profits from it, you have a trade that's going to go next week. Decay is going to kick in. Any movement higher, you're going to see your trade losing a lot of value. So if you still like it, if you still see that the momentum is still heading negative, and you see weakness in both Tesla and Amazon, then you probably want to roll it to the 28. Again, I don't know what the strike is. I'm assuming in the money that'll be 225 or 226. So if it is, you might want to roll it for another week, or at least open a spread just to reduce the magnitude of any decay that could happen. Once you get to that point when you have 1 week till the expiration date, you got to be really, really careful, because any tick that goes against your way, and now the trade is down 30, 40, 50%. Okay, Stefan, thank you for mentioning Revvion, already up 40% since yesterday on my calls. Hold until earnings. They're for a month out, and I got plenty of time decay built in. Okay, so Revvion, I'm doing shares, I'm not doing calls, but you're probably doing pretty good with the calls today, up about 5.5%. Look, we don't want to be too greedy with the call options on Revvion, because it could retrace closing the gap here. If it does, so I'll give you the number. The low is 14.19, so you're really close. If you want to take the close of the candle, it's 14.21. So I'd say if you get to 14.21, 14.20, book the profits and see what happens next week. I mean, you have positive momentum building out here, and I think we're going to retest the top of the wick. So you can be a little greedy, but you got to do something when you're sitting on profits of 50% or more. If you want to keep it, let's say, till next week, what you can do is you can open a spread on it. You can open a spread now that you're up 4 or 5% of the stock. Open a spread and cut the entry cost as much as possible. And you'll find that your chance of profitability is pretty good. So if you want to keep it, I would say open a spread. Definitely open a spread today before the close. The problem with this EV theme, they get hot a couple of days in a row, maybe 1 week or so, and then they go soft and they go cold again. That's the theme that I've been seeing year to date in the EVs and lithium. So I don't know if we wake up next week and then we see the EV theme going back down, and that could drop your profits in the trade. So at least we want to open a spread on it. Okay, Mav, UAL, I'm surprised we don't have a follow-through candle today. Well, the signs were there. Look at UAL, I mean, still weak, right? So you might get a candle at the end of the day. It's trying to make the 50, but if it doesn't make the 50, then it's probably going to slip down again. So give it a little bit of time. I think it works out. Because the PPI showed the airlines spending actually, or the inflation rate went down, which is, I don't know if that adds up. Because CPI shows us that it's hot. Then PPI says they dropped it. So do we see discounts in tickets? I don't know. Some of you may be working in the airline industry and you know better than I do. But did we see a drop in ticketing? I don't know. Maybe the wholesales pricing dropped for corporations or whatever. And that's impacting UAL a little negative here and Delta. But from a technical standpoint, we're struggling with the 50. I think once you break below the 50, you'll see more declines. And I'll stick with the puts here. Hey Mav, I'm sitting on Baidu, April 17th, 110 calls, playing daily and weekly charts. You're sitting about 5 to 10% profits. Would you say, would you stay or taking it off, anticipating a pullback? Look, with BABA pulling back like this, right, and if I look at the FXI, the upper bands, gapping above the upper bands, I think we see a pullback. So I want to add Baidu from a stock perspective, but it was tempting today, but I think that if BABA pulls back, Baidu will also pull back. So I'd say book the profits right now, take the trade off the table, but you're going to re-enter again. Just let that pullback play out. Maybe it'll take us down to closing the gap right here, or settle down back at the 90s, maybe the 20 days moving average. And then this report comes out, and you'll have plenty of opportunity to re-enter the trade. If you want to own a stock, you can exercise at a later date. But right now, when I see stocks trading at the upper bands like this, Even here, it did pull back, right? Every time it did that, it pulled back. Here, there was a breakout, but again, I don't think we're going to have a similar breakout here as easy as we've seen it right here. So the discipline says book the profits, and we'll be back in it again. Mav, how about Tencent to play the China theme? Rohit, yeah, maybe Tencent, but that's not available except here in the OTC market. It's the same thing. It's gapping above the bands. It's a little too hot. It's not sustainable to hold right here. So I think it pulls back. So all of China plays are heating up, right? All of them. Now even the casinos are heating up. So if you want to go with Tencent, that's okay. If you see any advantage for Tencent, I mean, it pays a little bit of a dividend, but I'd rather go with the big guys like the Baba or Pinduoduo. It's a little challenging, to be honest with you. Yeah, Pinduoduo, Pin the week. It's Baidu, Baba. If you want to go 10 cent, yes, but wait for that pullback. I think we're going to get a pullback in the Chinese names. What do you think of long SOFR, Z5, and short the euro? Okay, let's look at these trades right here. Now, if we want to do Z5, I think you might be following the momentum that we see in the European market right now, which I'm not sure that's going to hold, to be honest with you, as we head into next week. So short the Z5 and euro, that's maybe the trade that you should be going with. But then long SOFR, now that we see interest rates here in the US dropping down, I think you're onto something. Okay, I think you're onto something, but I'm worried about the euro trade. That we could see either the tariffs being announced on, let's say, the weekend, and what would be the market reaction? Would it be negative as we anticipate, or would it be something that, as we've seen yesterday, where we see, hey, it doesn't really matter because it's just a negotiation tactic, and we use that as a fuel to continue to move European markets higher. So that could be a problem with the short in the euro, but the long SOFR here, I think you got support to do it. At this point, the SPY puts look done. Do we keep them and add the call that you mentioned, or close an open new put debit spread? Yeah, I think you should migrate to the trade that I gave you yesterday, because it is the most proper trade, but it's going to require management. So right now, if you close like this, you see firming up in the momentum, you probably want to concentrate more on the calls than the puts. Another way you can do it is open the call leg right now, and wait till Monday, see how we trade Monday. If we're still trading higher, then you don't need the put leg anymore. If we begin to trade a little challenging and it appears that maybe the seasonality is hitting in, then you add the put leg and you decide at some point what to do with the calls that you got. So that's what I would advise right now. The 620 calendar, that's as cheap as you can get, and it's a realistic target for the upside. And then if we're going to erase the entirety of the gains of February, then we're going to go down to 600. So we'll take 600. If you want to go above, that's up to you. But the idea is we don't want to pay too much for the trade. Senior, I got the SPY. 600, 595, 590. Put butterfly for next Friday. Should I close or wait till we see what happens at the end of the day? You got the 600. That's a little too far, though. I don't think we're gonna make 600 by anywhere next week. It's gonna be really hard. So if you got some money in it, I would say take it out. If there's very little money left, like 20 cents, then might as well just keep it as a lotto ticket. Okay, Senior, Apple gained almost 10% in 3 days. We see it coming back down. Let's see how it trades today. It's above all of the important moving averages, the 50, the 100. Maybe it's facing the bands a little bit if we plug that in. Facing the upper bands a little bit, but the problem is if we're talking bullish about China, now Apple is being treated as a China play. It's going to benefit from the Chinese tailwind in AI. So I think, again, if you want to concentrate on the big caps on the short side, don't pick on Apple and NVIDIA because those are still the strong. Pick on the weak, and I've been saying it's Microsoft, it's Amazon right now, and perhaps Google. The strong is Apple, Meta, NVIDIA. So we want to leave them alone until we see a legitimate break. Now, this candle is going to be really hard to beat, by the way, this reversal candle. But at the same time, doesn't mean that Apple is ready to go down. I think it's going to be really hard to reverse the momentum and the narrative that we got from the collaboration with Baba and now Baidu. It might pull back, a mediocre pullback. It goes down to 235 or 233. And maybe there's a trade there, but if you want a serious trade, I will say pick on the weak, not the strong, on the downside. Okay, the RSP 180 or the SPX, better options for downside in the SPY. RSP 180. The equal weight is a little on the weaker side today. I want to see what the IWM is doing. Yeah, the IWM looks pretty weak here. Can't do it above the 50. It's not doing it above the 100. Look, maybe you want to go against the IWM at this point. Even though yields are going down, but IWM is not confirming any of that action. So maybe you want to go with the IWM. Because if you go SPXS, to be honest with you, that's a flawed ETF. Unless you get the timing precisely right, you're most likely going to lose money than win. Now, the RSP puts, that's okay too if you think that we're going to see a move higher again in bond yields. That makes sense. But what I'm seeing right now, it's heading down. So I'm not seeing support for the RSP. Maybe the IWM, because the IWM is acting as there is no risk on in the small caps. So maybe the IWM, but both trades, by the way, is certainty. If I give it a certainty, it'd be like 30 or 40%. It wouldn't be even above 50 because bond yields are heading down. So another thing you want to look at is continue to monitor how the SPY trades for the day. If we begin to slip down, right, if we begin to trade within the body of yesterday's candle, then we can talk about, okay, where's the weakness coming from? We'll look at the map, see where the weakness is coming from, and decide whether we're going to go against, let's say, NVIDIA or Apple or the defensives, the financials, or is the weakness coming from industrials, for example, because of the tariff fears. If that is the case, we'll pick an industrial, an individual name, better than going with the indices. AMF, crystal ball for Merck. I know we've broken the record in this one. Listen, I'm probably going to exit Merck at this point because I gave it enough chance to work out. It didn't break out of the wedge. It continues to head down. At this point, my tolerance is done. And I know maybe when I exit, I'll do you a favor because it might rebound at that point. But for me, gave it enough time, averaged down, did what I was supposed to do, didn't get any return on my investment. So at this point, I'm going to exit and try to flip to something else. So we talked about Gilead. I'm waiting maybe for a pullback in this guy. If it pulls back, we might enter Gilead or Amgen. Looks a lot better. Might just park in J&J. I mean, J&J been heating up with dividends now, dividend stocks coming back. I think J&J, if you look at the weekly, it might retest the sloping line right here. And it pays dividends, so it might be a good place to park the cash. Abbott, been hot. Maybe we'll see more gains to come in these kind of names like Abbott. So I'll think about a rotation in healthcare out of Merck. But I did my job. I averaged down, did everything I can, not giving me any returns back. Okay, thank you, goodbye. What do you think about NVIDIA moving... What do you think about NVIDIA move selling SOUN? Is the CEO a trader? Shorting stocks, it dropped 25%. You know what? It is suspicious because they bought the company and they pumped it higher, and now why are they selling the stock, right? It just doesn't make sense at all what they're doing here. And don't forget that he crashed the Rigetti and the quantum computing stocks. Maybe Jensen Huang is doing some trading here, but this is suspicious. You buy a company, you pump it higher, then you dump it. What changed? I can't help you with the answer here, but yeah, it is suspicious. You could have made a fortune today buying puts in Alibaba, 0 DTEs. I did a good profit. Good for you. Good for you. Caught the trade. You did pretty good. Then good for you. For me, I made a profit from owning the stock. So I'm a happy camper right now because I bought right here, right around here. And it broke. They came back down. We averaged down, and now we broke up. So I'm happy with it. But again, this was a really decent trade on your part because you got a nice selling candle. Then you saw here in the 3 minutes, if you're a day trader, you saw sort of a bearish engulfing candle breaking down, took the lows of the support right here. So plenty of time to initiate a trade once you got the confirmation. And now you have support at 121. See if it can rebound or not. Senior, IWM 220, 210 for March 21st. That's the trade that I'm interested in. And I might enter it at the end of the day. If the IWM stays weak, then I'm really suspicious because the IWM should be the benefactor of all of this. Bond yields are down. Everybody's acting as risk on. Why is the IWM not being bought? If it continues to act like this, yeah, I'll enter that trade that I told you about. 220, 210 for March 17th. If you want a shorter expiration date, you can do 225 and then sell the 220 or the 215. But I think the 220, 210 is the one I'm interested in. Also, a confirmation, folks, is Bitcoin. Right? I mean, Bitcoin is not confirming the market's move. Cryptos are not giving us any confirmation. To me, that's the IWM and cryptos keep me a little bit on the edge here. That maybe there's a trap coming. You bought TZA calls, Stefan. You bought TZA calls this morning. That's the same thing as shorting the IWM, so I'm with you. Ryan, thank you so much for joining. Adam, I got lucky. You picked up RUM shares yesterday. Just because they said it in the Oval Office and Tim Pool joined as their Rogan. Is there an actual hold here or should I take what I got overnight? RUM has a huge short position, so it's part of the Trump trade right now. Look, it depends. Like you made quite a bit of money here in the calls. If you want to be a shareholder, if you think this is a story that's going to continue to heat up, sure, you can hold a little longer. But as a trade, to be honest with you, this reaction right now doesn't look pretty good to me. But it doesn't look like it has support. You've seen a lot of names gapping overnight, right? But you see support. You see big green candles as we indicating short covering, more buyers joining. Not in this candle today. This candle looks like, if I'm zooming in here 3 minutes, it looks like we got a gap and now we're kind of stalling. So I'd exit. If that's the thesis behind the trade, you made pretty good. We'll exit and then see what happens because the daily chart has been stalling here since December. So I'd exit. If this was my trade, I'm out of here. Is 0 day the way to go to make big profits? Yes, but it's also the recipe to fuck up your account big time, right? Because if you get it wrong, it ain't going to be fun. You'll be losing 50, 60, 70% rapidly. But if you get it right, yeah, you'll make big profits quickly. But the key is once you enter a trade in a 0 DTE, you have to exit quickly. If you make profits, you exit quickly because you don't want to run into the time decay. At the same time, you have to be really, really strict and emotionally disciplined with the cut loss. If the trade is not working your way, and it becomes clear that it's not working your way from the first, let's say, half an hour, you have to cut the trade. Because if you stay with it, if you get to a point where a lot of traders do, is this mistake. We enter a trade, and we have a thesis behind it. We looked at a chart, be it, daily or weekly. I mean, I'm going to go to Apple here, give you an example. So I'm looking at the daily, and maybe Apple, topped right here. It's going to flip down. And I take a put options trade on it, for example. And next thing you know, I see Apple trading higher, moving up again. And my trade is now down 20, 30, 40% in a 0 DTE, or let's say a weekly expiration date. What I try to do instead of admitting that, hey, it's wrong, cut it, get out, You try to play the scenarios of, oh, maybe it's going to face resistance here, and then it comes back down. Maybe it's going to do this by the end of the day. Maybe this, maybe that. And you try to kind of romanticize the scenario where the trade is going to play out, and maybe average down on it and commit even more. When the purpose of the trade was, no, it's just an in, out, and hello, goodbye, right? But now, because you got it wrong, you got stuck into it emotionally, you turn it into something longer. That's a big mistake that traders fall into, me included, by the way. Okay, let's do J&K. How's J&K doing? If we look at J&K, that's still confirming that the market should be going higher, right? That's still looking pretty good here. It might stop at the resistance that we've seen it before and come back down. But right now, looking at the candle that we have today, it is giving me confirmation that the market should be heading higher. I'm not seeing any reversal in J&K, not seeing it in HYG either. So the bond market is confirming that stocks should be going higher. TLT is still going higher, right? Complete reversal from the CPI. If that changes because of the seasonality next week, then we'll see what happens. But right now, right as we speak, everything's confirming that the market is going to head higher. Mav, I know you use your own capital, but have you ever tried these prop firm companies, and or do you have an opinion? I'm not sure what you're referring to. I'm not sure what you're referring to in terms of, are you talking about margin? Let me know. Senior, Mav, by the way, I use margin in just shorting, right? So that's when I use it. But believe it or not, a lot of traders, they use margin to buy stuff. I try to avoid that. If it's not my money, unless it's a slam dunk, I'm not going to use it. Senior, Mav, a crypto trader, or a few crypto traders I respect are calling Q1 top, meaning we either see a blow off top or we already hit the top. What do you think? Are you talking about cryptos or the stock market? If we're talking about cryptos and we see a blow off top, you got to be careful who you listen to though, because a lot of crypto traders are just biased. They'll tell you, hey, this is going to happen and higher we go and this and that. But meanwhile, we've been stuck here doing nothing at all in Bitcoin, at least. So I'd say be careful. Watch the technicals. Get the analysis and the opinions. We all do that. But at the end of the day, I would stick to my guideline of the technicals. That yes, I agree with you that there is a major move coming in cryptos. Could be up, could be down. And how do I know that? Because we have a consolidation pattern for all of these weeks. And the psychology begins to kick in. Folks want to buy it, but if it heats up again, they feel that, okay, maybe I was waiting for a dip to buy it, but there is no dip. And we're heading to all of these targets. I'm just giving you Bitcoin as an example. We're going to head to 250 and then 1 million, and I'm going to miss out. So you see all of a sudden the psychology kicking in, folks capitulating to buy. And you see Bitcoin with a massive breakout. On the other hand, if we just get stuck right here, or we don't get any good news, and the folks who are been holding for a long time, and they see opportunities in the market where we see Tesla moving higher, or Palantir moving higher, or Shopify moving higher, they might think about, okay, maybe I should book profits here and rotate to something that is working. If that is the case, we'll see a big move to the downside. So I'm with you that there's a major move coming, but I can't say up or down. I'm just saying I'm prepared either way. If we get a breakout in the weekly chart in Bitcoin, I'm ready either way. Senior, you're describing my exact mentality when I lost big on a 0DT. We're all susceptible to the same mistakes, my friend. But you have to have some sort of like a stoic approach to it, to really adhere to the pain of getting it wrong and exit the trade as soon as you can when you know you're wrong. I mean, at some point as a trader, you know when you enter a trade and it begins to work out against you, you know from experience, from past trauma, you know that this is how this is going to end. It's going to end against you. The moment you cut the loss, you bite the bullet, and you get out of these kind of trades, the better. So if you can have that discipline, you've already ahead of like 90% of traders. It's just part of the game. We enter these trades. I mean, sometimes I do the same thing, by the way. I'll be in an airport waiting, and I'll enter some 0DTE for fun. And now I got stuck into it. I'm in the plane, and I'm trading, and it becomes so stressful about one trade. It's just not worth it. So accumulation of the capital for the trade, if it is just a zero DTE, you don't want to commit too much. Acknowledging when the trade is wrong and cutting right away is perhaps the most important skill. Okay, OCK Cult, like my funded futures, an Apex funded trader. I'm not familiar with those, to be honest with you. So I can't help you with that answer. If it's acting as margin, then, most traders use margin day to day. So long as you know how to manage your margin, then you're good to go. But I don't like to use money that's not mine. Yeah, we talked about Bitcoin. Hey, Mav, what is your opinion on ISRG? This guy been hot, and do we chase it here at a stock that is trading at 600? I'd be careful with that. I mean, the report is already out, and it may be doing a sort of a breakout here in an ABC pattern. So if you buy it, I would say set a stop loss. What is the stop loss? The thesis is we have an ABC breakout, right? So it becomes invalid once we break below the B leg. So the low here was 563.35. Here it was 27, so we'll take the lower number. 563.27. See, you trade below that number, you don't have a trade anymore. You don't have a position to own anymore. But it is a good company. It has an AI narrative. It has a demand narrative. So it's a good stock, but keep in mind this stop loss right here if you enter. What is your suggestion in the Amazon trade? 28, right? 225, 215. We're spending 200 to make 8. Or you want to go longer for the 21st, then you can go with the 220, 210. So we'll do spreads, no naked. Because if you do naked, it doesn't work out. You really have very little room for maneuver. So an example here for everybody who's listening. You go naked in any trade, and it goes against you. This is the capital you're committing, and that could be your total loss. When you open a spread, it's sort of a natural hedging strategy because you're reducing the loss. You're increasing the chance of profits. Look at this. Chance of profit here at 24. If you sell it at 210, you're making it at 27% chance of profit. And at the end of the day, you're still going to have a gap enough to make profits. And you're just you're selling something where you think we're going to find support, where we can't really go below in the time period where your trade is valid. And this is why when traders come on Discord and tell me that, hey, I can't do spreads in my broker, I'm like, well, you got to do spreads. You can't trade without doing spreads because it's a natural hedging strategy. Anyways. These prompts have challenged to reach a profit goal in live markets in a stimulated account. Then they give you a funded future account. I don't know. It sounds fishy to me, but I got to look into it. I can't give you an opinion without looking into it and seeing it in action, but it sounds a little fishy. Do you know any AI stock picker that will scan, that searches for put and calls, walls, etc.? I think I know what you're talking about, what you're referring to. Is there sort of an AI tool that shows you the walls and all of that? This is what I'm trying to develop, okay? So I'm not familiar if there's any program that does that, but this is what I want to do for you guys. So we're talking about it with some people right now. Based on the experience that I got doing this show and this Discord and all the streams for a few years now, I know what the traders want. I know what they're looking for. I know the pitfalls. Can I put in a program, an AI program in options trading that can give you suggestions, that can give you the chance of profitability or the chance of loss in real time and suggest actions? Say you have a trade open, and then the program will look at it, look at the price movement in real time, and then give you a suggestion that, hey, listen, with the move today, your chance of profitability is dropping. I suggest you close the trade, or open a spread, or roll this, or buy a call this, or hedge that, right? If you have a tool that gives you these kind of suggestions and shows you the walls, the gamma walls in real time, maybe you look at the flows, right? Look at the flows and give you in real time where we see flows increasing in a positive or bullish way or a bearish way. So a lot of stuff that we can do here, but it's something that I'm working on right now. Spot Gamma seems to be the best for option flows. Have you used it? Yes, I did. The problem with these platforms, though, is the sourcing, right? So if they're hooked into a data source that's not giving you an accurate picture or the full picture of the market, it could be a little bit deceiving. And that's the problem with the data that we get from brokers. That they give you, sometimes they give you the data that's from the broker, the flow that comes from the broker. So a lot of traders will look at Robinhood, for example, and say, oh, but the flows are negative today. Why is the stock up? Because there are positive flows in other brokers. So unless it's hooked up to the data coming from the actual market, it becomes problematic. Okay, why is margin safer in shorting? Or is it because there isn't much to make in shorting without a margin? Well, you have to borrow via margin when you're shorting anything. So it comes with the territory that you have to borrow, you have to open a margin and have some capital margin requirement, right? So when you have a margin requirement, either you have the cash in the account or you have to actually borrow a margin against the amount that you just borrowed. So by definition, having a short, you have to have a margin. Will Hood keep pumping or will it keep ranging for now? Hood, let's look here. On the daily chart, it's a little too hot, but this kind of behavior, by the way, suggests that it's probably going to stall a little bit, maybe head down a little bit, but it will continue to move higher. Right? It doesn't look to me that the traders are selling it right now or shorting it. I think that Hood is going to stay strong. Now, do you go long? Do you buy it right now, or do you buy calls on it right now? No, because you're probably going to get stuck. It's probably going to be killing the implied volatility. And you see that in the volume. The volumes will stay higher than usual, but they're going to begin to trend down. And when you see a trade like this, if there's consolidation, you don't want to enter right now the calls. The puts you can enter only if you see a flush, which I don't see right now. From the behavior of the chart and the results that they gave us, I think it's still going to be strong, and folks are not going to be incentivized to sell their holdings in Hood. Mav, Snow is selling today. Any ideas why? I think all the software is weaker today. It makes me worried a little bit that we have a bearish engulfing candle and we might flip from positive momentum to negative momentum. So maybe we should initiate the hedging that we were planning to do before earnings. We initiated right now, and that could be the 185 puts, including the expiration date right here for the February 26th. So you're going to go with the 28. Let's see how much is that going to cost. If we do a 185, it's too much though. It costs a lot of money. So we want to do something, the 180 and then sell the 170. That's still way too expensive for a hedging strategy. So at this point, if it closes like this as a bearish engulfing candle, my 2 cents, I would exit just to be safe, because we've seen negative reactions for multiple software stocks once earnings came out. I still like the story of Snowflake. I think that it has a really positive tailwind, but you gotta abide with the technicals and be on the safe side. If it is indeed a bearish engulfing candle, I would exit. I think that's the best strategy. Exit, wait in the sidelines. Let's see how it plays out. If it breaks above 193.75, for example, which I have as the next resistance, if we do that, then you got the green light to be back in. And again, it's just only a difference of about, let's say $5-6. So it's not a big difference, but you get at least confirmation and a peace of mind. But boy, if we close like this and then we continue to head down, and then this report comes out for whatever reason, causing the stock to go gapping down, it'll be ugly. And as you've seen, the hedging strategy was really expensive, and I think it went even more expensive after we got the trade desk reaction. So that's my 2 cents on Snowflake. Okay, OC Cult, I'm going to look at it because it is an interesting idea, so I'm going to look at it. Hilarious. look at the product reviews for each companies you're talking about. You will likely find that they change the targets or find way to keep your deposit and not provide the funded account. Oh, see, I'm telling you, something is fishy about it. Bronco, OIH long term. Not liking the look in the charts. OIH, I'm with you. Yeah, there's... I mean, I would say still you got to give it the benefit of the doubt that it could turn positive in the momentum. So maybe set a stop loss, right? Because the risk here could be sort of a bear flag pattern. So if you break, let's say, below the low of this candle right here, I would call it a 275. Yeah, that's going to be a problem. Otherwise, it could be an opportunity here to change into a positive momentum. Now, you got to remember, if bond yields go down, a lot of energy names are dividend paying, so they should appreciate by default. So you see the XLE is doing pretty good, even though if we look at crude, not doing so hot. So, and that's because just the dividend aspect of the stocks, which, by the way, not sustainable, because at some point, if crude continues to go down, you'll see even the XLE heading down. But I will give them the benefit of the doubt because they're trying to move momentum from bearish to bullish again. Give them a few days, a couple of more days, and then decide. Now, if you want to short, also give it a couple of more days, just in case we accelerate the bullish momentum. Do you trade futures? Do you recommend it for SPY, ES for Fridays? Yeah, I trade futures all the time. It seems each Friday SPY dumps at least in the last 3 weeks. You could, but again, futures trading in terms of ES, if you trade the E-mini futures, a little more expensive because you're spending the 6,000 level versus the SPY. Is there any benefits from trading the futures? I mean, overnight, sure. So if you're gonna watch the futures overnight, it makes sense to trade options on the futures. I found it to be more reliable from a technical perspective analysis. So if you look at the technicals, usually you see gaps in the SPY, and that could be misleading. But the chart in the continuous contract is a lot easier to watch, a lot easier to do analysis on. That's the benefit. And the price, when you look at the price of the premiums for futures trading versus the actual price of the chart. So relatively, you can look at an option. It looks like, for example, cheap because you have, let's say, SQs, right? SQs, it's trading at 26. Okay, you can look at something like the SQs, and you buy, for example, a call 27 with the expiration date today, and you think, oh, it's just only $10, but it's relatively to where the stock is trading and the chance of profitability, it is expensive. So if you do the same thing on the SPY and look, for example, if you want to buy a call on the SPY, and I want to go with the 28, and let's say it's 620 with about 2% break even, you're paying about 150, which kind of looks cheaper, with a chance of profit of 20. But then you look at the E-mini futures and you take the same movement. Let's go with the June contract. And we're looking for a 2% move by the 28th. So it'll be about 6,250. It might look more expensive as it reads like 460 or 470 versus the about $100 that you're spending on the SPY, but relative to where the stock is trading at, the value of the stock, it is way cheaper. So this is what I find out with the futures. The attractiveness of the futures is relative to the movement of the stock and how much you can make based on the pricing of the stock. Because 6,000, if that moves $100 overnight, right, you can make a huge amount of money in the futures. It might be difficult to comprehend right now, but if I give you actual examples of actual trades, it'll become clear that if we have similar trades for similar movements, 2%, 1%, in the SPY and the E-mini futures, you'll find out that at least 8 times out of 10, using the futures will net you more profits than the SPY. So that's the advantage of trading futures. Let me build the Maverick GPT or Maverick coin. I'm tired of trading with discipline. We're missing on the fraud. Yeah. Problem is, where's the time, right? I mean, you know that I'm doing a few more jobs besides this one, so time is my enemy. Did you make an Excel file with the win rate of the unusual activities? I looked at some of the activities from December, right? So that's what we're going to follow. So now that we have the expiration date of February, we're going to look at the expiration of date of January too. Now that most of these trades are done, and we're going to review them in a separate video. The February is still not done because we have 21st, but we're going to look at the trades that were dated for Jan and how they played out. Do you make enough in the stock market to drive a Lambo? Even if I did, I wouldn't buy a Lambo, to be honest with you. Like, it doesn't do anything to me. Maybe a classic car, that does it for me, but the Lambo never did it for me. Mav, check out Discord. Okay, let's do Discord here. Okay, what about PayPal? PayPal, the 200 days moving average. I was actually looking at PayPal today. Yeah, I was close enough to put it in the morning brief. But I was going to put it in the morning brief because of a falling wedge pattern. So the 200, maybe that's what you're eyeing as support, but I was going to put it in the morning brief as in, no, you buy PayPal as a rebound play. And your target would be the top of the breakdown candle, 82.69. So if you want to do anything with PayPal, I'd suggest you go long, not short. Okay, let's do here. You've been getting calls from Airbnb, Mike. They're now approaching local businesses and selling their services and taking 20% cut. It is an interesting thing. I'm going to do that with our business in Napa. I think it's a good idea, kind of like Dash, expanding into more verticals. And they did pretty good, Dash and Airbnb, after earnings. Why did TTD plummet? You're showing me the valuations here. But again, most of the market is overvalued, by the way. Most of the market doesn't make any sense. From a traditional valuation perspective, the market doesn't make sense at all. If we look at here, the map, grab any of the valuation metrics you'd like. Okay, let's look at PE, for example. The entirety of the market is insane, right? I mean, none of these, traditionally, let's say go back 10 years ago or even more, you'd never see an asset manager recommending to buy a stock at a 41 PE ratio or Tesla at 172. None of these valuations make sense at all. But we're living in a different time where, again, for a long time, I didn't like these kind of valuation metrics. You can be cute and play the forward PE ratios and try to find something cheap, but even if you do that, it's majority of the market is insanely expensive. If you look at the growth, PEG ratio, you're still going to have the majority of the market expensive. Price to sales is something that I consider a little bit more valid, but you also see insane overpricing of the majority of the market. And this is why when I do the earnings reviews, what I show you guys is the ratio of growth, either in revenues or net income or cash flow. Each stock is valued by a different metric, right? And you see that the price movement of the stock is equivalent when the market gets it right. It's equivalent. Let's say a stock like NVIDIA, an example. NVIDIA cares about the rate of growth in revenue as a stock, because this is the story behind NVIDIA, is we see more and more demand for AI chips, and they continue to price them higher and make more revenue. The sales continue to expand. So we look at the revenue growth rate year on year versus the stock movement year on year, and you see it pretty much aligning. If there's any divergence, as in the stock movement went by, let's say, 15%, but the sales for the company went higher by only 8% or 7%. Then there's a degree of overpricing, and we see the stock heading down after earnings. On the other hand, let's say stock trades up only 5% year on year. Then we see that the rate of growth in sales is up 15%. Now we see the stock gapping higher. They account for that. Certain stocks that are not really growth companies like NVIDIA care more about different metrics. Like, for example, we looked at the big caps right here. And I showed you what really matters is CapEx and net income, the rate of growth in net income. In some cases, of course, net income can be manipulated, so we use operating income. That's what really matters in the big caps. And you see Meta, for example, tracking exactly the rate of growth in operating income. The stock is tracking the growth exactly. So this is how I use valuations. I don't really like to use the PE ratios or price to sales. They just don't make sense. I mean, the majority of the market is absurd from those metrics. GDX, the February 42 puts broke down today. Hold for a little longer or close. You're up 40%. GDX, I think gold is just beginning to move down, so I would stick with those. Yeah, you're getting a bearish engulfing candle. You have really hot momentum. I think you get a little more out of it. What is the expiration date, though? The expiration date is the 21st. Okay, so that's problematic because the 21st, you get a bump Monday, you're done. Right now, all of a sudden, your gains are down to 10%. So what you want to do is either book the profits, enroll to a lower strike. Let's say you go down to 41, 40, and you give it another week till the expiration date. That's one option. Another option, let's look here, GDX. You have the 42. So you have about $50 here. You can roll it down to the 41 for the 28. That's going to be a little more expensive, though. We're looking at the put, excuse me. Looking at the wrong thing here. 42. Okay, you got $92 in it. $92, if you roll it down to the 40 for the 28, you're still going to book profits and use some of the proceeds to continue to be in the trade at a lower strike. So that's one option. Another option is you have the 42. And if you want to hedge a little bit, book some profits from the trade, you can actually sell the 40 or the 41 if you'd like. Right, and book some premium here. Only problem with this move, it's going to limit your profit of one. So you're going to have one maximum between 42 and 41. You're going to have $1 plus 40. So if you're satisfied with that profit, that's the trade you're going to do. Otherwise, I would say I would just book profits here and roll it down to the 40, give it another week. Hisham, how are you seeing Team? Still a good software bet or curling down on the daily? I'm going to stick with Team because it is the strongest of the bunch. Maybe it's going to go softer a little bit here in terms of correction, as we see a lot of the software stuff doing the same. But all in all, to me, and I promise, and I usually don't want to promise because I don't like disappointments, but I promise, because I already worked on that one, that we're going to get the software stack battle out this weekend. So we're going to do Team, we're going to do ServiceNow. We're going to do some of the names that came out this week in the software. CRM didn't come out, so that makes it a little hard, but at least Team versus ServiceNow will come out. And you'll see that the growth here is pretty impressive. So whatever pullbacks we get in this name, I think it's an opportunity to buy. Okay, let's do... will you go long, INTC, now that it dropped a lot? Yeah, probably would. Question is, can we get a little more of a pullback? Can we find support right here? I think so. The high was 22.41. So if we go down to 22.5, I think that's the point where I want to enter. And then bet that we continue to go higher because we see more and more short covering. But today, just give it a little more time. One more day. And then we're going to re-enter. Or enter, because I'm not in Intel already. Wheat, will you hedge over the weekend or not? I don't think we need to hedge. I mean, the dollar is going down. We have a big cushion here that built up, right? About 3.5%. So I don't think we need to waste money in hedging here. It's working out the way it's supposed to, and on the weekly chart, it's beginning to break out. So just stick with it for now. Have you touched on BA for a put spread? Looks to be going lower. The channel on the daily, 180, 170 for March. Okay, let's look at BA. By the way, the deliveries were pretty good for Boeing. So, I mean, the highest deliveries in years. But is it breaking down? I don't see it breaking down, though. All right, so 180, 170 puts, maybe, but hold your horses a little bit, because this could be a breakout candle, consolidation in the bull flag, then higher it goes. Right, so I don't think we have a confirmation to enter this trade that you're talking about. Claude, yeah, you buy PayPal, right? Let's buy PayPal because, as I said, it's a falling wedge, so I'm with you. If you want to buy it, go ahead. Mav, want to know your opinion about trades we done and now better manage them. IWM 210, 220. Okay, that one, I like it. We'll keep. The February 28, 590, 595, those are we're taken out, right? The 595, anything below 600 we're taken out. Whatever money scraps left, we're taking them out. And we'll stick with the trade that I gave you yesterday, because that's the most rational trade that we have. Yeah, on the RKK, we talked about that yesterday. There's no trade. Once bond yields go down, there's no trade on the RKK and the risk on stuff, which again bring out the question of the IWM. Why is the IWM lagging? Why is the RKK going higher and IWM lagging? Does the IWM see something that we're not seeing right now? That's the problem that I see with the IWM, that it's maybe pointing out to, hey, folks, got to be careful here. I am not seeing a risk-on sentiment, even though something that trades with the small caps like RKK is blasting higher. So there's a lot of mixed messages going on in the market right now. But because the IWM is the underperformer, I'd rather go against the IWM versus RKK. Good morning, Mav. Do you think MGM and WIN are too hot right now? Thank you for everything. If I may ask, sorry if we covered already, but with the dollar expected to go down, maybe China exposure only going upside. Thank you. Yeah, I mean, I'm adding China like crazy right now. Like Baidu, Baba, we're trying to add everything we can. The casinos are just beginning to heat up, so I don't think you're too late in WIN. I think it goes back to the hundreds, but you have to give it a little bit of time. LVS, I mean, that could be the catch-up trade if you don't like to chase WIN. You have MLCO, cheaper entry point. That's about $6. So any of these Chinese casinos, Chinese plays will just continue to heat up. Think about NEO. I think that's going to be the next one to break out. And still trading about 438. So all of the China names are heating up, and I'll stick with them. Hey, Maverick, thank you for all the information. I have a general question. I found it difficult to close the options in time at down 30%. So usually I like to go 30%, right? 30% is the maximum pain that I would want to endure in any trade. So the trade completely failed. My performance is still positive, but could you, of course, be much better? Do you have a tip? Do you set the stop immediately when you open? Thank you. Okay. I'm going to talk about this in the Options 101 video a little more, but you have to understand that by design, options trades are by design, the odds are against you, right? The house always wins. So the game in options trading is we're trying to flip the odds, which is not easy to do. In other words, if you enter 10 trades, 10 exact trades, most of them will be losers. At least 6 of them will be losers. And you're going to have 4 that are winners. That's by default. Most of your trades will be losers. Only a portion will be winners. How do we flip the odds and become profitable in the long run? Is to cut the losses quickly in the losers and then keep the winners, add to the winners. That's the key to success here, because when you have a lot of folks don't want to average up, right? When we talk about options like this, folks don't want to average up. They always talk about averaging down. Why would you average down though on a trade that's not working your way, right? Why would you average down and add more money on a trade that's maybe the thesis is not valid anymore? Now we get to the emotional side of options trading, where we're trying to sort of romanticize the trade to work out, but it's not really going to work out. It's sort of a relationship, and this is why I wanted to do that video. And I'm still working on it, so it's going to be a fantastic video. But again, we talk about trading, emotional discipline, and in relationships, it's the same thing. It's just simple psychology. So the discipline would say you diversify your income, your outcome, by not putting all of your eggs in one basket, in one trade, and hoping that's going to be the hit. You have different trades with different outcomes. And what you do is, as the trades begin to play out, which ones are not working out or appear that they're going against your way. You had a thesis, you looked at the chart, you said GDX will go down, close the gap right here. Next thing you know, GDX is trading higher, closing above the top of the candle. Okay, now we don't have a thesis anymore. So we cut the trade right away. Some folks, no, they try to romanticize it and say, oh, but maybe it's still overbought here and it might come back down later and it might average down. All of that is just going to cost you. So you cut trades like this, and then you have another trade. Let's say, I'll give you Apple, for example. You think that Apple is going to head to the top of the candle right here, 247, 248. So you buy the 250 calls, and the trade is working out. You average up to it as it continues to work out. Next thing you know, the trade is going above 250, and now you have a profitable trade that's compensating you for all of the losses that you've done because you cut your losses early. So that's the name of the game in options trading. But by default, you got to lose more than you win. The key is to make your losses small and your wins big. Let's see here, folks. This is a boring tape, to be honest with you, and this is why we're talking about other stuff. I have the GDX 41 puts for the 21st as the GLD hedge. Would you change anything with this? Coming to life, but not profitable yet. Maybe sell the 40 put today. Yeah, it's the same exact situation that we talked about with Jeff. He has the 42 puts, though, so he's up. You're still waiting a little bit more. But I would sell the 40 just to give it a little bit of a chance. But again, if you sell the 40, you're probably going to see your profits limited to $1. So maybe what you want to do is actually, you have the 41 for the 21st, 44. Maybe you want to go with the 40 for the 28. Right? So you buy the 40 for the 28. It's going to be the same exposure that you're going to get from selling your 41 for next week. But at least now you have more time for a hedge. And if there's a pullback in gold, a severe pullback, GDX will probably go below 40. Because if you look at the chart right here, GDX, looking at the daily, 40 is about where we see this gap right here. So you might continue to go down all the way to find this support right here. As far as moving averages, we're way above everything. So the 20 might be as close as we can get to 40. So that's what I would do. Just roll it down to the 40 and buy another week. Do you see Lunar going down? LUNR. At the daily chart, do I see it going down? Maybe. Maybe you're seeing a possibility of sort of a topping in a shoulder, but we haven't finished forming that shoulder yet. You can form a shoulder, by the way, at a lower point, and that's actually more bearish, right? If it rolls over for now, it becomes more bearish. Sometimes you can form a shoulder at a higher point, and that's usually makes the pattern a little more challenging. But if you have a lower shoulder, yeah, and then you break the neckline, you see declines right away. But right now, I'm not seeing the entry yet, because this could be, again, sort of a falling wedge. You're breaking out of it. You want to form that shoulder, so you go all the way to that point, and then find resistance. So I don't see the entry right now for a short in LUNR. OKLO, getting ready for a drop. Well, we talked about that yesterday. If you want to enter right now, because to me, this is a distribution pattern. It might resolve in your favor and drops. So I would enter. I don't have confirmation yet, so I'm going to enter, let's say, 30% or a third of the position that I'm intending to enter. And then if you take the low of this candle right here, sitting right now at 47.49, then I would add the other 2/3, because at that point, distribution pattern pretty much done. and you got to try to find the next support. It might be right around here, 41, 42. You might find some support. So enter with the third position right now. Okay, folks, let's do a last look here. SPY, the daily chart, again, not giving us a lot of conclusive evidence, but the day is still young. And I'm looking at Apple right now. It's still doing pretty good, but we'll see what happens at the end of the day. NVIDIA, a little bit of weakness showing up, but not enough. If it goes negative along with Apple, then okay, that's going to be a development that is worthy of trading at that point. But for now, go to the video from last night. I gave you a trade right there with the 620 calendar calls and then the 600 and 590 put spread for 2 weeks from now. Let's do that trade because it gives us exposure to both outcomes and then manage them depending on the move today. If there's no major move today, we'll do that Monday and close one of them and keep the other one going. And you'll see that trade will be easily profitable because you're betting on both outcomes. Worst outcome, of course, for that trade is if, let's say, the SPY stays flat for the next 2 weeks, which with this kind of activities that we have in the options market, kind of impossible to keep it flat at this point. And the seasonality could be a factor. But anyways, let's wrap it up right here, folks. Thank you for joining us for this session. If you're going to leave, you're done with the day, you're done trading. So I'm going to say have a great weekend and happy Valentine's Day. If you're going to stick with us, then we have a chat session coming in Discord in about half an hour. We'll see what happens. Take care.